Hello, everybody. Welcome back to Crypto Talks. My name is Phil. That's Rob. Every time,
You
I
get
will
it.
never.
You get it.
I'll never get it.
Just
Either
put an
way.
arrow above you, like
Yeah, I'm
Rob's
probably
there.
gonna have to. All right. Anyway, so it's Macro Tuesday, Wednesday today,
Wednesday.
and yeah. So we decided to move this a day forward
Yeah, it was a
because
good job we did. Fun things have happened today.
yes, and the Fed rate decision is out, and we're going to get through that soon. What we are going to do, though, is we're going to go over just some really quick news. We're going to then move along and talk a little bit really quickly about housing and mortgages and stuff like that, and some projections for interest rates and so on and so forth. And then Rob is going to also look at some really important stuff going on with Evergrande. And that's going to be interesting. So let's go directly into news number one and see what we got. So simply put, Hong Kong are ready to accept Bitcoin ETF applications, and they have already started accepting them. I think it was here we go. Harvest is a fund manager in China who has now sent in an application to the Securities and Exchange Commission version of in China. So that's going to be fun to see how that goes, because I mean, major market, right? And we'll see what happens. Hopefully we get even more buy pressure. If it goes through, we don't know, and whenever that actually opens up, we don't know either. But still,
yeah, I wouldn't expect it to be any time in the really near future. If they're only just accepting applications, it should be a lot quicker than the US has done because they have all the blueprint through, but they still have to assess it from their own legislation and their own set of rules. So it's not going to be a new process. This will be a longer term thing.
Yeah, and we're going to talk a lot more about China during this stream, actually. So let's circle back to this later on. Excuse me. Next thing, it seems like Chris Larsen, one of the executives of Ripple, got hacked. Wow, that sucks to be him. And it's $112.5 million worth of XRP that's now in various wallets. The wallets have been frozen as far as we know,
because of course Ripple can do that.
Exactly. And law enforcement is already involved, and this was something that came out today, just a couple of hours ago. It was SAC XBT on Twitter that kind of caught it, or announced at least the news. And yeah, big bummer. Chris Larsen made a comment as well, and it was, he's clearing up that it's not Ripple that's got hacked. Whoops, it was him. So that happens, I suppose.
It does.
Yeah, it shouldn't, but it did.
It really definitely shouldn't. If you are somebody with that much money, then you should not be getting hacked, and you should have. If you are clearly going to be a target because you are somebody who is heavily invested into projects, especially big ones, then have some security, please, people. Look after your security is only as strong as your weakest link. Like, you've got to do consider who can get into your network, who could, what the access routes are, because if they can get into your computer, then all they need to do is there's malware and stuff like that can sit there and keylog, and eventually you put something in and type something that you shouldn't. You type in a recovery phrase for a wallet, and boom, there you go. That's what they've been waiting for. And this it's very easy to do. So please do look after yourself, and consider splitting your keys up is a safe option as well.
I mean it. This reminds me of the posts that the SEC did back in October, telling people to have 2FA and all that stuff, and then they got hacked because they didn't have 2FA. So, if you can enable 2FA, at least that you can.
Oh, your microphone's gone funny.
Is it funny or gone?
There you go. That's better. Haha.
All right.
Oh, that was better. It just went. Yeah.
Oh, really? Oh, well. Yeah. Hey, it's a live show. Stuff happens, right? Next, I'm gonna go through this stuff really quick. So the SEC, people are predicting, especially Standard Chartered Bank right here, they're predicting that the SEC will approve ETF applications for Ethereum in the coming months, starting in May. That's when it's like the latest date, and they're going to probably keep pushing that all the way up to do it the last day when they have to have a response to it, just like they did with the Bitcoin one, essentially. They don't really have any like legal right to say no, which is kind of funny. And they already have the futures ETFs running, and they've accepted that. Same with Bitcoin, and that's one of the reasons to why the Bitcoin ETFs were approved in the first place. And it was after Grayscale actually basically sued the SEC and won. So if they try to kind of do that again, then Grayscale might just do the same thing again and quite literally automatically win. So it's likely that it's coming. I don't see it happening before the 23rd of May. But yeah, it's very likely that it's coming. And then we'll have to fight over what's the third crypto ETF going to be. I know where my bet is. We'll see.
So what the only thing I would just say on this quickly is exactly the same as we sort of forewarned with the Bitcoin ETF that by the time it launches, that means they already have the Bitcoin. There's no immediate buy pressure. The buy pressure already comes, and we've seen that in the chart of Bitcoin over the last year.
Yep.
Ethereum has been quite stagnant by comparison. Now, maybe that is just because retail were offloading it and moving on to new shiny things. Meanwhile, institutions were able to accumulate nicely, and their bags are ready and filled. And that's why these Standard Chartered are saying, we know it's coming because they know who's got the assets, where they're stored, etc., etc. So maybe the third coin is something that has done a remarkably large gain in the last year because it's started from a much smaller base and with much less liquidity, and is able to wasn't able to hold the price down.
I'll give you some hints to where my prediction lies, and it's where is the interest from retail and more, let's call it institutions. Where are they investing right now in spot where they can? Where's the talk? And that's where I'm going to leave it. I'm not going to name anything because I don't want to get people all riled up and everything. But I'm fairly certain I know what it's going to be.
And I disagree because I have a hunch.
Yes.
We will see.
Yes. Well, we can fight over that in another stream. Next quick point here. Global liquidity has been rising for the past couple of months. A couple of months, 2 months. But then for the past 2 weeks, it's been falling or trending downwards. And 2 days ago, it started trending upwards again for the first time. So global liquidity seems to be pointing upwards. It's too early to say that it's going to continue that, but it certainly looks that way in my book at least. So just to preface that's good for markets, because when global liquidity is rising, more money is floating around to be put into various assets. So that's good. Last point, and actually what's going to happen now is I'm going to skip over one thing here because I scrambled my notes a little bit because I forgot half of them at work. I had to memorize as much as I could. But we're going to have a look really quickly on some heat maps for the crypto market just to see what the last week has been looking like. And it looks something like this. It looks exactly like this, actually. So this past week has been really good for crypto. Everything is up. Bitcoin is up a massive, well, it was 10 earlier today, 10%. We have Ethereum up 4%, Solana up 20%. We've got BNB is actually up 2%. XRP is down 1%. I don't know if that's because of what happened today with the people got scared about the hack. I would imagine
regardless.
So.
Yeah.
Avalanche. Yeah, Avalanche up 15%, Cardano 7%, Polygon 11% up. The only thing that's actually really down, like noticeably down, is Ton and whatever this is, Mantle. I don't even know what that is. But everything seems to be fairly green. All these small ones, I'm not going to click on all the red ones just to check down here what they are. You'll just have to guess. But yeah, it looks good this week. Looks good. Hopefully it stays green. We never know, right? And I just have to wait and see what happens. But so far, so good. And the crypto market, by the way, is at 1.75 trillion now. I think it was 4 months ago we were at 1.3 trillion. So it's a massive gain since that big pump started going on back in. Oh, now I have to remember what it was. Give me just a second. Yeah, we started a pump in October.
September,
so yeah.
October. Yeah,
end of October we started. So since then, it's the crypto market cap overall has gone up by hundreds of millions of dollars, which is nice to see. And I'm happy. I don't know about you, Rob, but I'm happy about that. I was getting bored with things being boring and sideways for so long. 3 months. But yes. And the halving, by the way, is 77 days away today. So we still have less than 3 months of waiting, basically. And there's a lot of things that will happen before we get there. And some of that is something I'm going to touch on right now. So we have some predictions done by the IMF, and it's GDP growth projections for 2024. And they predict or project that China's GDP will grow by 4.6% in 2024. That's a massive growth compared to what we've seen like in the past couple of years. India is number one actually here with 6.5%. So if someone is looking to, for places to look for stock investments, perhaps maybe India is a good place to start looking for what you might want to. I'm not saying go and buy India stocks. I'm saying if you're looking for somewhere to start looking, then maybe that's a good idea. The US is predicted to grow 2.1%, and the global GDP is projected to grow by 3.1%, which is, I don't know about you, but it feels fairly subdued. I think they've been pretty careful with putting numbers here, I think. And we'll just have to wait and see. 3.1% for global GDP is it will be interesting to see if that actually goes through. I can't remember the numbers now off the top of my head what the numbers were in 2023, but we'll have to wait and see.
Yep.
And we do have some housing stuff, and this is also all this is macro stuff. And so home prices, and this is US numbers, by the way. And then what happens in the US usually kind of translates over to, it moves over to what's going on in the rest of the world.
Here.
Yeah, it does eventually. So home prices year over year today compared to last year, same date, is up by 3.7%. And people were really scared about, a housing crash taking place. And that all these numbers that I'm about to give you suggest that that's not happening at all. So home prices are up by 3.7% year over year. Houses for sale are down by 5.6% year over year. So there's very few sellers, right? And if you're looking for a housing crash, these numbers are not going to be good for you. If you're waiting for and by the way, so year over year, houses for sale is down by 5.6%, but month over month, 10%, which is pointing very harsh downwards right now for month-over-month. It's a very big drop. And mortgage interest rates are actually down from 7.8% to 6.7%. And all of this suggests that the housing crash that people are waiting for is likely not going to take place.
Not going to take place?
It might.
On what basis? So, well, that's it. On what basis is it not going to take place?
But we'll get to that.
Well, so I would just like to say, you mentioned here just on the US market that you have to look at. These are markets with an absolutely enormous amount of momentum. In ship terms, these would be oil tankers. These have got a huge amount of weight behind them, and they take a long time to turn around. And once they start turning around, it's quite difficult to stop them from turning around. So when you think about a drop, a rise of house prices, you say 3.6%, I think. If that was, that is down from something like in the double digits in 2021, 2022. So that
18%.
Yeah. So from say 18% to something like 10 or 12 down to something like 3 or 4, the momentum of that is absolutely huge, and you can't just turn that around. That is almost inevitably saying house prices are going into negative territory, and there will be a housing crash. And the interest rates lowering on mortgages, whilst the Fed funds rate has stayed constant, if interest rates are going down on mortgages, that is because there is not enough demand at the higher interest rates. It means that in order to generate sales, they have to take a lower interest rate. And what that means they're doing is they're taking a haircut on their margins. They're not making any money off that mortgage. And if you have the ability to invest in US government bonds at over 5%, to take that extra 1% gain for the housing market is a huge additional level of risk. And there will be a very finite amount of money that is willing to lend at that rate. And this is what forces governments to lower interest rates. The fact that when the free market is not willing to service the debt at the interest rate that the government are setting, they're setting the minimum interest rate on bonds. US real estate is a step above that in terms of risk, so it demands a higher interest rate. Car auto loans are a step above that, so they generate a higher interest rate. Credit cards are a step above that, etc., etc. So when you see interest rates falling, that isn't a good sign. That is a sign that the economy is struggling to hold the weight of what is basically coming down on it. And when you see, you mentioned that house prices are coming down. An interesting rate, I don't have numbers to look at so right in front of me, but the interesting thing to look at is the actual numbers of houses being sold, not the number being put on the market, but the number that are actually closing and being sold. And those have collapsed, particularly in commercial real estate, especially in the US. There is a huge amount of vacant commercial real estate, and that is causing havoc in markets, and that causes a repricing of all real estate, because if the commercial market collapses, then people who are invested in real estate see value in the commercial market, and they start to allocate some of their residential portfolio into commercial. So what happens? There's a sell-off in residential. It doesn't mean that everything can't carry on dropping, but overall, there's arbitrage along the way down, and people will it will drag the entire market down. So that's early. It's a pretty early warning sign, along with things like the yield curve uninverting, which is generally always foreshadows a recession with a very high degree of accuracy. And I think that means we can probably move on to something even worse than the US housing market, which is the Chinese housing market. So maybe sorry, I just turned my screen off. If you could just stick my screen on.
I got you.
Then so big news coming out of today, and the main reason why it's a good thing that we waited, I think, for today, because we haven't even really mentioned that much about the meeting today. But China's property giant Evergrande ordered to liquidate. So this is a Hong Kong court made the ruling on Monday that they cannot afford to pay or restructure their 300 billion in debts. And we see that's a lot of debt, and it's not just Evergrande. This is Evergrande is the first victim of this, and we can see how badly Evergrande has been hit. And this is the stock price going all the way back to 2010. It had a nice sort of stable.
Nasty.
Yeah, so there's a blow off top for you, and a sign it can happen in all markets. A rise from a peak of $7 in April 2015 up to $31 in 2017, and that's not good. And so it hit in September 2021. It was $2.27. So that's in itself is a 94% haircut, and it's now currently trading at 16 cents, which is a quite magnificent, I think, 99.5% cut. Roughly.
It's a staggering number.
Yes. Essentially, this is worthless. This is now junk. This is a failed company. This is not worth a single penny. And there's more problems with that, because this is not just Evergrande. This is a systemic problem. And China's real estate crisis not touched bottom. And so here is a bit of context that, so similar to the US, you've got housing sales, they are falling in China. 17% down in December alone compared to the previous year.
Yeah.
Yes. And so here is something that was quite alarming that I saw, which was, so here is a massive $124.5 billion worth of bonds. These are dollar-denominated bonds. Out of 175 billion are in default in the Chinese properties market. That is insane. That is just a complete failure of the system. Essentially, there's no way that this is failed. This is a failed company, failed market even, and it's just a matter of time before that failure really starts to have an impact. And this sector is going across the board. I think this market shows how badly it's dropped since 2013. So you have real estate investment overall is down to minus 17% below. I think that's just the mean of the last 10 years. So really, really, really bad. Probably closer to 40% from the peak, 50% from the peak. It's just bad. It's terrible. And the worst thing about it is that Chinese real estate is estimated at 25 to 30% of the country's GDP. So what are the Chinese government going to do about that? They've got two options. They have to ease hard, lower interest rates, because they're not going to be able to afford this debt. And this is the Chinese version of the global financial crisis, and it's going to be much, much bigger than the global financial crisis, because this is just this is the money that we're talking about here. Is I think it's $450 billion is the amount of money that's needed just to pay for homes that Chinese real estate companies have already promised to build. So there's 20 million units outstanding that will cost $450 million to finish. Billion dollars to finish. Sorry, yeah, 450
big
billion. That is what's basically owed just to the Chinese people. These are just ordinary people, ordinary citizens who have been dragged into the idea that owning real estate is the way to get ahead, the way to retire in China, because their markets are so regulated and closed off that there's not a lot of ways you can put your money except real estate, which is heavily incentivized. So the problem is really, really bad, because the outstanding debt across the entire sector is estimated at $8.9 trillion. And that's about 50% or so of China's GDP in 2022. Problem?
A little bit.
And this is a problem that's not going away. This is a problem that cannot go away without significant easing, which is solution number one. Or solution number two, they let the whole system collapse. And that is, as I say, 25 to 30% of GDP.
Yeah.
That is the retirement of near enough every single Chinese person in the country, because there's not many of them have much else. And as an aside, as an additional point to really how systemic the problem is, because the Chinese real estate market functions, it's a functional Ponzi scheme, in that, yeah, this $450 billion of homes that have already been promised to build, they would want to pay for that construction by new people saying, I want you to build my house, here's the down payment, and started paying mortgage. So in China, you take a mortgage out on a piece of land, and you would literally start paying your mortgage before anything's even been built. And China, in doing so, they've just been incentivized to build and build and build. And in many cases, these ghost cities, they ended up filled because of population growth. Well, China's population isn't growing anymore. They've said they've had a population decline according to the latest census for, I think, the second year in a row. And that is now a permanent trend that's going to go on forever until their population roughly halves in a quite catastrophic demographic collapse. And they have overestimated their population by somewhere like 100 million people. So there's a lot fewer of them than they even thought there were. And because of those factors, there's an estimate that there's maybe double the amount of housing in China that people actually need. And because of this culture of buying first, second, third, fourth homes, often that haven't been built, often that are just living completely empty in ghost cities for years, because eventually people moved in, and this is no longer a viable system, and the Ponzi scheme is failing. It's falling apart. And when it goes, China have to decide whether to prop it up or let it fall. Both are bad, because both are incredible shifts, seismic shifts to the global economy. Because everything that we just said to the US market, this is a tsunami. There are ripples. These waves travel everywhere, and the US market is already looking weak. The European market's looking weak. Japanese markets, Korean markets, Australian markets, Canadian markets, you name it. There are very few places where housing is doing very well. There are some places, but they are the exception rather than the rule. And if China goes, we go.
Yeah. Well, so here's the thing too. Like, I've heard a bunch of arguments where it's like, okay, so China they'll have to ease, or either they'll have to print a lot of money, or they will have to let it collapse, essentially. And if they print a lot of money, they will devalue their currency, but that also adds it adds a little bit of liquidity too, where assets will go up in value as well, because of some of that will likely go into buying assets, right? So it's like you say, if this goes, and if the collapse really happens, it's going to be on a global scale. It's going to be felt everywhere. And I think, and correct me if I'm wrong, but we had a long discussion about this when we first heard about this thing starting to take place last year. Maybe it was even in 2022. I'm not entirely sure, but we did have a discussion about this a long time ago already. And I think if you go through all of our live shows that we've uploaded in 2023, somewhere in there, right around the time when Evergrande started to kind of show signs of whoops, we had a long talk about that. And I cannot personally remember when that was. I'm not sure if you can remember, Rob.
When it collapsed, it was just over a year ago, probably about November, December 2022. So a while ago. Yeah. And as far back then, we were saying, this is going to
be bad,
break the system. And as I saw, as the number, there's hundreds of billions worth of debt in the system, and something along the lines of 35 out of the top 50 Chinese real estate companies are in default of some sort on their debt. This is catastrophic when it goes. Yeah, and I think, like I said, the only way for them to fix this is that they print all that money and put it in, and then that's suddenly
the general, the people of China will lose a lot of buying power, because that will be hilariously inflationary, because they will have to lower the rates, they will have to print a lot of money, and then the wheel starts turning again, so to speak. And so maybe we're not out of this whole thing on a global level just yet. It could be.
I never thought we were.
No, I'm not. But a lot of people have been talking about that the trend is turning, and pause here.
Yeah.
It's going to be rate hikes here and there, or sorry, rate cuts and so on. And that actually brings me to the next point. So here we go. So there are some long-term interest rate market projections coming out from the Fed, which basically, just to simplify, a bunch of people at the Fed, they get to kind of do some projections on where they think the market might go, and so on and so forth. And they gather up projections, and then they put the average out, and then they let the public know. And so in terms of rate cuts, 90% are saying that it's likely to happen in May. So that's post Bitcoin halving, by the way. And if we get rate cuts in May, that will pretty much jumpstart asset growth a little bit. It won't be on the day.
Yeah.
It will take some time, but then liquidity will start moving, and things will start kind of moving the way that we hope it will move, which is up for us that are in crypto and investing and all that. And I'm just double checking here now. I'm going to bring this up on the screen because there we go. If you guys remember this from a couple of days ago, or last week, I think, or was it? Yes, yeah, Monday, maybe even. So this is the Fed interest rates, this blue line right here, and here's the previous rate hikes in 2017, 2018, 2019. And back here, we got the ones in 2006 and so on. So we had this pause thing. So I took the average from this, and I projected it over to this to see when we started the rate hike, when it was going to start the pause, and then when it comes back down to zero, where we're back to like basically zero interest rates again. And the orange line, I'm not sure you can see it, so I'm going to zoom in. But the orange line is the Bitcoin halving. And this is on a monthly scale, so every tick here is a month. This white line right next to that's in May. And so I feel like this is a fairly decent prediction, because if they start dropping the rates in May, just like predicted, then we will see right on this line, as predicted by Rob and I, that we will see this start playing through. And then if this prediction plays out completely, we should be back to zero, or at least close to it, right around May of 2025. And obviously, this is a model that we built on some very simple metrics. Okay, it's just an average of two previous...
Just a guide. Just a guess, yeah.
So don't use this as a guaranteed thing, yes? Good. All right.
Or but it's your own fault if it doesn't work out. So
this is something I have to say. This is something with models. When you build models, this is not really a very good model, but this is a prediction using an average. But if you look at models, other models like the rainbow charts for Bitcoin and all that stuff, that's a model. It's not always going to play out. It's one way of looking at things. So keep that in mind. So I just want to get right into the news from the Fed here, because the Fed today came out with their decision on the rates, and simply put, they're pausing. Still, they're going to carry on pausing. So there's no rate hike, there's no rate cut. The pause continues. So this line right here will continue to go sideways, and that's it. It was very boring. We didn't really have time to read through the whole report, but yes.
basically, in terms of going back to what you said about this being a model. So my job is building models. I build lots of models all the time, and a very useful phrase as somebody who builds models is, all models are wrong, some models are useful. And in that case, this applies, I think, in that there's no way of telling exactly where it's going to go. Nobody knows what inflationary pressures, what wars are going to start, what wars are going to end. There's a whole host of things that can change. There's a whole host of innovations that could come along. Nobody knows the future, but you can see from the past what the economic pressures are of rising interest rates. You can see how fast we've risen interest rates, and so you can make some sort of guess about what the effects of these rises are going to have. And it doesn't take a genius to work it out. Like, it's really simple trend analysis. It's just looking at what happens. And notice how we're now starting to see this more and more, that, oh yeah, the soft landing's looking okay. Look, economic figures are good. Massage, look at this one. And it's yeah, there's a lot of underlying problems. It doesn't mean it's going to go now. It doesn't mean it's going to go at all if they decide to just smash market buy and print $100 trillion. Then yeah, nothing has to crash at all. But either way, economic things are coming. We're going into a cave. There be dragons.
Yep. Well, we do actually have one question here, and it's very simple. Will the market dip now?
It's either going to go up, go down, or go sideways.
Yeah, I think if you're asking about something like Bitcoin specifically, currently Bitcoin is in a red day today, after having a sizable move up. If you're talking about just Bitcoin as our what we're looking at. So Bitcoin is the best for the crypto market, but I mean, we did bounce. Bitcoin did bounce on 38.5, sort of where we predicted it would, and it's been in an uptrend since the 23rd, 23rd, and until now, and we've kind of double topped on Bitcoin. I'll just bring this up here. And this is the hourly, by the way, so it doesn't hold much power behind any of this, but basically, top here was the rate pause decision, and that's a double top right there on the short time frame, which is 1 hour. So it's basically double top right there.
Yeah,
it needs to, when we have something like this, it needs to do something like that, and then go, if it's going to go, because you need to create a higher low, right?
I kind of fancy it to just keep going, to be honest.
Yeah, me too.
But I don't, as in without that deeper correction you mentioned, I think it'll hold these lows and hold. I don't know, but you can see it here. It's wicking back up. I'm hopeful that it's not gonna come back down. Yeah, it's not a big deal. I'm not, but yeah. I still think it's more. I think it's got a bit more power in it yet, and we'll see.
Yeah, we'll see.
Like you say, it's a few percent drop would not be surprising. Potentially, it's an excuse to load up your bags if you think that this is about as low as it's going to go. I think there's a solid case for that. So let's see.
I mean, so in case your question is more aimed towards a long-term thing, will the market dip now? If now is, if Evergrande, if everything goes really badly in the Chinese housing market, it really everything starts crashing, then yes, the market will go down. And that's not just Bitcoin, that is everything.
Yeah,
all over the place. So we'll just have to wait and see. That's all we can do.
This is the thing about when it comes to liquidations, you look at what's happened today with Evergrande. Evergrande has collapsed and lost essentially all of its value. They've got $300 billion in debt. All of those creditors, they're not getting their money back. They've got, I think, 250 billion of assets. So yeah, they have to get stripped. So yeah, some people may get the money back, but yeah, that company's gone. It's 240 billion of assets. Can you actually get 240 billion of them? Because every other real estate market is also in dire trouble. Who is the buyer for these assets, for these $240 billion worth of value? What's it worth? It ain't worth squat. So yeah, it's
the solution is
things,
money printing and it's a bailout.
Exactly.
Essentially,
you can give them 240 billion, but if these are dollar loans, then they have to be paid. And so either way, these things have to be sold. They must be disposed of in some way. The company that owns them doesn't exist anymore, and so that is a forced sell. And this is something to always bear in mind. The market can never ever price in forced sellers. People who have to, no, it doesn't matter how little they want to, people who have no choice but to sell their asset at the absolute worst time, and they drive the market down further. And that is, when this happens on a Bitcoin scale, we drop 10%, and everyone goes, oh, okay, we're back at the same price as last week. When it happens in global markets, you see things like the COVID crash, you see things like October 2020. And occasionally you see things like the great global financial crisis and the tech bubble crash. So, are we in a 1929 depression style move? Yeah, I'd say it's not a completely wrong analogy. It's not an incorrect analogy.
I mean, no, I mean, so for me, it's like this. We're at the end of a business cycle. We in 2022, things went down. That's when we knew, okay, this is just not good, right? But we haven't come down that much. That wasn't a huge dump in the global markets. It was a dump, yeah, but it wasn't like, oh no, the world's ending, right? And does that mean that we have to see it? Like, we're moving sideways right now, so it's very difficult, like in the long term, looking at all the charts and all the numbers. Things are looking bad, things are looking good in some areas, and cat hair. And we're sort of, if you really zoom out, we're going sideways pretty much. It's like, yeah, there's a dip, but it's one of those sideways moving weird things. And so it's extremely difficult for us to say, oh, look, the Evergrande thing is, if this happens, if that happens, if that happens, if that happens, it's going to go down, down, down. But if that happens and that happens, it's going to go up, up, up. So it's like, we can't give you predictions that will tell you it's going to dip or it's going to pump or it's going to go sideways.
Yeah.
It's very hard to predict that stuff. So just be careful and keep in mind, try to keep track of everything that's going on in real time as much as you can. If you really want to, see what's going on, or have that sense of calmness in yourself that you know what's going on all the time, so that you're prepared when shit does hit the fan, to be in or out.
Yeah. So always remember is that there are a million ways for you to be wrong, and there's only one way for you to be right.
Mm-hmm. So
when it comes to predicting the future.
God, that's so dire.
It's not necessarily dire, because you can be close to wrong, but the point is that you do not know, and the further in time you go, the more, let's just Doctor Strange it and start looking at more and more branches. The further out you go, the more things that you don't know about can happen. Nobody thought that a year ago that we would have ongoing war in Gaza and the Houthis being arseholes on the Strait, blocking causing trouble in the Suez Canal. Nobody predicted that. That wasn't something that was on our radar, but it has had global macroeconomic implications. It's rerouted a very big chunk of the world's shipping.
Yep.
That's so there are externalities that can't be predicted, and some things will force people to sell, and markets drop, and they drop viciously when a lot of people are forced to sell things they don't want to.
And this is one of the big reasons to why I'm less of a trader, more of a long-term investor. Hence, a huge allocation into Bitcoin for me. I'm not thinking Bitcoin, oh, what's going to happen with Bitcoin in 2 months? I'm thinking, where's Bitcoin in 2037? That's my scope. I think 15 years ahead. But that's just me. But yes, I think we do need to round this off here, though, because it's getting late here and people are going to bed. And yes. So hopefully this gave you at least some insight into, what's going on right now. This kind of the point with the macro Tuesday, which is now a Wednesday. But yeah,
this week. Yeah.
So if you did learn something, or if you got scared, if you got happy, or if you're confused, leave a like, subscribe if you haven't, and follow us on Instagram and TikTok. We do have TikTok now, and we're posting on it, so make sure you follow us there. It's right here below in this thing. This thing. And join the Discord, by the way.
Yes.
Because we're there. We're gonna sit there after this and talk. And if you have any questions that you don't want to bring up here, join, talk to us. We're gonna hang out. We're more than happy to talk and kind of expand our views together and all that. So yes, cool. Thanks everybody. Cheers.
Yes.